All right, now in this video, we're going to talk about the statement of financial position, or in other words, the balance sheet, the consolidated balance sheet, or the classified balance sheet. So the statement of financial position essentially has the three out of the five main accounts. It has assets, liabilities, and shareholders' equity. So remember, assets are resources owned or controlled by a business, or in other words, future benefits. Liabilities are claims of lenders and other creditors, or in other words, future obligation. And then we have shareholders' equity, which are claims of shareholders. So essentially, we're taking our assets minusing our liabilities to arrive at shareholders' equity. Or in other words, these accounts are going to come directly from the statement of changes in equity. So the main accounting equation is that of assets equals liabilities plus shareholders' equity. This has to always remain in balance. This is very important. So I'm going to give an example of the statement of financial position. Once again, this has a three-part title. We have the company name, the statement name, and now the date. Okay, so as you can see now, the date is slightly different from the prior statements. So once again, I want you to pause this video, get a piece of paper, and write this out as we go. So this statement is split up into two different slides. However, you can put this on one piece of paper. We split up into two different slides for the purpose of this video, just because if I put everything on one slide, it'd be very small. So once again, the date for the income statement and the statement of changes in equity was for the month ended, but for this one is going to be at October 31st, 2018. Very important. So assets always go first. So assets are listed in the order of liquidity. So what this means is that essentially the order of liquidity means that what we could convert to cash the fastest. So cash goes first, accounts receivable goes second, supplies goes third, prepaid insurance, and then we have equipment. So these are all of our assets, which are future benefits. So all of these add together gives us 29,067. So essentially, once again, the formatting is very important. Dollar sign over here denotes that all of these are dollars. Then we have an underline because we're adding all these together over here. 11,400 plus 11,200 plus 1,000 plus 550 plus 4,917 gives us 29,067. This is a dollar sign, double underline, because this is a main figure now. So the whole point of the statement of financial position is to get the accounting equation to balance. Remember, the accounting equation is assets equals liabilities plus shareholders' equity. So now we're going over to the liabilities and shareholders' equity side. So liabilities, we have all these main accounts. So we have accounts payable, we have salaries payable, we have interest payable, we have unearned revenue, and we have the bank loan payable. So all of our liabilities add together gives us 8,525. So once again, we have a dollar sign to denote that all of these are going to be dollars. Total liabilities is not the final figure. That's why it's not underlined or has a dollar sign there. It is a very important figure, but the main figure for this part of the balance sheet is going to be total liabilities and shareholders' equity. Very important. Now, under shareholders' equity, we're going to have common shares and retained earnings. And if you can recall, common shares and retained earnings, these balances at the total shareholders' equity, 20,552, is coming from the second statement, which is a statement of changes in equity. As you can see, the statement of changes in equity, the second statement, these balances of common shares of 10,000, retained earnings of 10,542, and total equity of 2542 go directly onto the balance sheet or the statement of financial position. So this is why the order is very important. So now, once we have total shareholders equity, now we're going to figure out the accounting equations and see if it actually balances. Now, total liabilities and shareholders equity, we're simply taking the 8,525 from total liabilities and we're adding it to total shareholders equity of 2542 to arrive at 29,067. And this is double underlined and dollar sign because this is now the main figure. And as you can see now, total assets 29,067 equals total liabilities and shareholders equity of 29,067.